proposals contained in the proposed Finance Bill 2025 under Income Tax Act. Mr. Speaker, to enable faster recovery of investment by businesses on loose items such as utensils, linen, and industrial tools, the bill proposes to amend the Income Tax Act to allow for a full cost deduction of these items in the first year of purchase, as opposed to the current 3 years. This will improve cash flows of the relevant businesses. Mr. Speaker, we have noted increased tax disputes arising from audits carried on cross-border transactions. These disputes could have been avoided if the multinational companies had advanced pricing agreements with the commissioner at KRA. To address this gap, the bill is proposes to amend the Income Tax Act to empower the commissioner to enter into advanced pricing agreements with multinational companies. Mr. Speaker, the Tax Laws Amendment Act of 2024, passed in December last year, introduced the minimum top-up tax in line with the global best practices. But the Act inadvertently omitted the due date for payment of the tax, thus creating enforcement challenges. To address this, I have proposed an amendment to the Income Tax Act to clarify that the due date will be the end of the 4th month following the close of a company's accounting period. Mr. Speaker, again, the Tax Laws Amendment Act of 2024, passed in December last year, exempted gratuity payments from income tax, actually pension and gratuity. However, the provision is not clear whether all gratuity, including from private pension schemes, is exempted from tax. In this respect, the bill is proposing to amend the Income Tax Act to clarify that all gratuity payments, whether from public or private sources, are exempt from tax. Mr. Speaker, to encourage wider participation in virtual asset transactions, especially among the youth, the bill proposes to reduce the digital asset tax rate from 3% to 1.5%. And Mr. Speaker, to ensure consistency and effective administration of the law, the bill proposes to amend the 3rd schedule to the Income Tax Act to clarify that fringe benefit tax is payable by the employer at the corporate tax rate, and that withholding tax on qualifying dividends and qualifying interest are final tax. That is not clear in the current arrangement. And Mr. Speaker, under the current Income Tax Act, individuals with mortgages, and honorable members would be interested in listening to this. Mr. Speaker, under the current Income Tax Act, individuals with mortgages for purchasing or improving residential houses can claim tax relief on interest payment on the mortgage. However, those who take up a mortgage to construct their own residential houses are excluded from this relief. That is the law as it is today. To ensure fairness, the bill proposes to extend this benefit to interest on mortgages taken for construction of residential houses. This will support home ownership and align with the better pillar on affordable housing. Mr. Speaker, the current tax-free daily subsistence allowance of $2,000 for private sector employees on official duties outside their usual workplace is lower than that of the public sector employees. To enhance equity, the bill is proposing to increase the tax-free daily subsistence allowance for private sector employees from 2,000 to 10,000 shillings. Mr. Speaker, Kenya has an opportunity to strengthen its position as a regional financial hub. In this respect, the bill proposes amendment to the Income Tax Act to provide that companies certified by the Nairobi International Financial Center Authority, NIFCA, that invest new capital of at least $3 billion over a period of 3 years to pay a reduced corporate tax rate of 15% for the first 10 years and 20% for the subsequent 10 years. The companies qualifying for this will be required to employ Kenyans at senior management level. The startup companies that are certified by Nairobi International Financial Center Authority will enjoy a 15% tax rate for the first 3 years and 20% for the subsequent 4 years. And dividends earned by certified holding companies and regional headquarters will be exempted from tax provided that at least 250 million is reinvested annually in Kenya. Mr. Speaker, we have noted that some employees seek refunds from KRA on reliefs of deductions that ought to have been deducted by their employers. To address this challenge, the bill proposes to amend the Income Tax Act to make it mandatory for employers to consider all eligible tax reliefs and deductions when computing employees' income tax. Presently, employers are not compelled to deduct these reliefs in computing pay as you earn. Value-added tax. Mr. Speaker, while a supplier is required to issue a tax invoice at the point of sale, there is currently no definition of tax invoice under the VAT Act. This creates ambiguity on what constitutes a tax invoice. To resolve this ambiguity, the bill is proposing to amend the VAT Act to define a tax invoice. Mr. Speaker, to strengthen tax administration and enhance compliance, the bill proposes to require the issuance of tax invoices for all suppliers, whether taxable or exempt. This amendment will support better record keeping by taxpayers and facilitate the pre-population of returns. Mr. Speaker, to support business operations, the bill proposes to shorten the period for claiming refunds on bad debts from 3 years to 2 years, and to allow taxpayers to either request for a refund or offset it against future VAT liabilities. Mr. Speaker, again, entities in special economic zones currently benefit from VAT exemptions and zero rating, but there is no provision to recover tax when these benefits are misused or abused. To safeguard revenue and promote accountability, the bill proposes to recover VAT where exempted or zero-rated goods or services are used for purposes other than those intended. Mr. Speaker, to prevent leakages or revenue leakages, strengthen tax administration, and promote equity across sectors, the bill proposes to move some zero-rated goods and services that are consumed locally to exempt status. Further, Mr. Speaker, some of the goods exempted from VAT have multiple uses, making it difficult to effectively monitor whether they are finally used for the intended purpose. In this respect, the bill proposes to amend the VAT Act to remove such exemptions. Under excise duty, Mr. Speaker, to minimize tax disputes relating to classification of locally produced accessible goods, the bill proposes an amendment to the Excise Duty Act to clarify that the East African Community Common External Tariff and its classification rules shall apply to all accessible goods, both imported and locally manufactured. Mr. Speaker, to streamline the processing of applications for license to manufacture accessible goods by the Commissioner, the bill proposes to amend the Excise Duty Act to require the Commissioner to provide feedback on the application within 14 working days from the date of receipt of all valid documents. Mr. Speaker, the Excise Duty Act provides for taxation of alcoholic beverages based on pure alcoholic content, which increased cost for producers using spirits over 90% alcohol content as raw materials from 356 shillings to about 1,000 shillings per liter. Since undenatured extra-neutral alcohol is a key input in the manufacturing of spirituous beverages, the bill proposes to amend the Excise Duty Act to provide an excise duty rate of 500 shillings per liter for undenatured extra-neutral alcohol above 90% strength supplied to licensed spirituous beverage manufacturers. Mr. Speaker, to promote equity and fairness in taxation of accessible services offered through the internet or electronic network, the bill proposes to amend the Excise Duty Act to bring non-resident persons without a physical presence in Kenya into the tax net when they supply accessible services through these mediums. Mr. Speaker, to avoid double taxation of fees charged by digital lenders, the bill proposes to amend the definition of digital lender under the Excise Duty Act to exclude entities licensed under the Banking Act, the Cooperative Societies Act, and the Microfinance Act. Honorable members, to enhance clarity and consistency in the administration of excise duty legislation, the bill is proposing to amend the Excise Duty Act to clarify that imported plastic products, including plates, self-adhesive plastics, and printed polymers, will be subjected to excise duty at 25% of the excise value, or 200 per kilogram, whichever is higher. Now let me speak to miscellaneous fees and levies. Mr. Speaker, the Export and Investment Promotion Levy on billets and wire rods, which are raw materials in manufacture of nails, fencing wires, gabions, bolts, and nuts, have raised production costs of these products. In this respect, the bill proposes to amend the Miscellaneous Fees and Levies Act to review the levy downwards. Mr. Speaker, to promote Nairobi as regional aircraft maintenance hub while managing tax expenditures, the bill proposes to amend the Miscellaneous Fees and Levies Act to introduce import declaration fee and railway development levy on small aircrafts and helicopters, but retain the exemption on spare parts of all aircrafts. The Tax Procedures Act, 2015. No, the act is 2015. Mr. Speaker, to enhance the Commissioner's ability to recover unpaid taxes from non-residents, the bill is proposing to amend the Tax Procedures Act to expand the scope of agency notices to include non-resident persons. Mr. Speaker, and this is controversial, to close a loophole that hinders enforcement of tax compliance and ensure timely revenue collection, the bill proposes to amend the Tax Procedures Act to clarify that enforcement of tax collection when a tax appeals tribunal or a court judgment on tax dispute is in favor of the Commissioner shall only be suspended where a stay order has been granted. That is not the one that I thought I was going to read. The controversial one is yet to come. Mr. Speaker, to remove the financial and legal barriers that may hinder effective enforcement of recovery of unpaid taxes, the bill proposes to amend the Tax Procedures Act to provide that property transfers made by or to the Commissioner in recovery of tax liabilities be exempted from stamp duty. Mr. Speaker, to promote transparency, uphold fair administrative action, and strengthen trust in tax administration, the bill proposes to amend the Tax Procedures Act to require the Commissioner to provide reasons when issuing amended tax assessments to a taxpayer, so that we avoid misuse of Kenya Revenue Authority for political reasons, where they just sit and tell you that 3 years ago you did not pay such and such, and yet you had already been cleared for tax purposes. Reasons must be provided. Mr. Speaker, to address taxpayers' concerns regarding penalties and interest arising from system-related delays or administrative errors beyond taxpayers' control, the bill proposes to amend the Tax Procedures Act to allow the Cabinet Secretary to grant waivers on penalties and interest arising from such circumstances upon recommendation by the Commissioner. Presently, if there is any error made by the Kenya Revenue Authority on your tax assessment, there is no law to reverse it.